Silver is moving again, and this time, it's not a normal rally. Some see $75, others see $100, and a few are quietly preparing for a crash. The real question isn't how high silver can go, it's who gets hurt when it moves. History whispers before markets scream. Every major silver surge in history followed the same pattern, and this time, it's not a normal rally. Right now, that pattern is flashing again. So will silver hit $75 or explode to $100 or break the moment everyone piles in. Silver doesn't make headlines quietly. When it moves emotionally, pulling in hope, fear, and speculation all at once. And today, silver is doing something it has done only a handful of times in the last century. Before you decide whether this is an opportunity or a trap, you need to understand one thing. Silver is not just a metal. It's a mirror of stress in the financial system. And right now, that mirror is cracking. Let me show you why. Why silver never moves without a reason. To understand where silver is going next, we need to rewind. Because silver has a long memory, and it repeats itself far more often than people realize. A forgotten pattern from the past. In the late 1970s, inflation surged. Trust in government policy weakened. The US dollar lost purchasing power. Sound familiar? Silver didn't rise slowly during that period. It exploded. Prices multiplied in a short span, not because silver suddenly became valuable, but because confidence in paper systems declined. Then came the crash, not because silver was useless, but because speculation overtook reality. This is the first rule of silver. Silver rallies begin with fundamentals, but end with emotion. Think of silver like caffeine for markets. A little sharpens focus. Too much causes chaos. Why silver is different from gold. Gold is conservative. Gold waits. Gold reassures. Silver? Silver reacts. Silver is smaller, thinner, and far more volatile. That volatility is exactly why it becomes dangerous near major turning points. Historically, silver tends to outperform gold late in economic cycles, right before uncertainty peaks. And that's what makes today so interesting, because the economic cycle is stretched. Debt is high, interest rates are restrictive, growth is slowing, and confidence is fragile. Silver thrives in these cracks. The industrial trap most investors ignore. Here's a fact rarely discussed in mainstream coverage. More than half of annual silver demand now comes from industry, not investors. Solar energy alone consumes massive amounts of silver, and that demand isn't optional, it's structural. Add electric vehicles, add medical technology, and add advanced electronics. Silver isn't being hoarded, it's being used up. And once industrial silver is consumed, it's gone. That creates a slow-burning pressure most investors underestimate. This means silver can rise even when investors are unsure, and that's exactly what we're seeing now. Supply, the silent constraint. Now let's talk about the side nobody likes to talk about, supply. Silver mining hasn't kept pace with demand. Why? Because most silver is mined as a byproduct, not a primary resource. You don't open a silver mine just because prices rise. You open copper, lead, or zinc mines, and silver comes along for the ride. This makes silver supply slow to respond, inflexible, vulnerable to disruption. Historically, when demand rises faster than supply, silver doesn't gently adjust. It snaps. When silver turns from investment to obsession, here's where psychology enters the story. Silver attracts a very specific type of investor. Those who feel priced out of gold, those seeking asymmetric upside, those who believe this time is different. That mix is powerful and dangerous. A lesson. From the 2011 silver spike, in 2011, silver surged rapidly. Retail investors rushed in, media coverage exploded, and optimism turned euphoric. Then, almost overnight, silver collapsed. Not because the world stabilized, not because demand vanished, but because leverage and speculation reached unsustainable levels. Silver punished late arrivals. Silver has a habit of rewarding patience and humiliating impatience. Why? This cycle feels different, but isn't immune. Now let's be fair. Today's environment is not identical to past cycles. Industrial demand is stronger, energy transition is real, and geopolitical risk is elevated. That strengthens the fundamental case. But here's the danger. When fundamentals and fear align, silver doesn't move rationally. It overshoots. And overshoots are followed by corrections that feel brutal, even if the long-term trend remains intact. This brings us to the 3 scenarios ahead. 3 futures for silver. First scenario, the $75 path controlled breakout. This is the most probable near-term outcome. Why? $75, because it represents a psychological milestone, a technical breakout level, a price zone aligned with inflation-adjusted historical ranges. In this scenario, silver climbs steadily. Volatility rises but remains manageable. Institutional interest increases, and retail participation grows slowly. This is the scenario where disciplined investors thrive. But here's the open loop. What happens when $75 stops being resistance and becomes support? Second scenario, the $100 surge, the panic trade. This is the scenario everyone talks about, but few are prepared for. $100 silver doesn't happen quietly. It requires a trigger, a recession scare, a banking shock, a currency confidence event. When trust breaks somewhere else, silver becomes a magnet. But understand this, a move to $100 would not be smooth. It would be violent. Price swings would be extreme. Emotions would override logic. And timing would matter more than conviction. The higher silver climbs emotionally, the closer it gets to instability. This is where fortunes are made and destroyed. Third scenario, the crash, the reset. Nobody expects. Yes, a crash is possible, even in a bullish cycle. Silver crashes don't signal failure. They signal excess. When leverage builds too fast, when speculation outruns demand, and when everyone believes downside is impossible, silver resets hard. But here's the paradox. Historically, silver crashes have preceded some of the best long-term buying opportunities. The key difference? Preparation. The final truth, why this isn't about price. So, will silver hit $75? Could it touch $100? Or will it crash first? The honest answer is this. Silver doesn't reward predictions. It rewards understanding cycles. Silver exposes emotional investors and empowers disciplined ones. So right now, the signals are clear. Pressure is building, volatility is coming, and complacency is dangerous. The next silver move won't ask for consensus. It will happen first and be understood later. The only real question is, will you recognize the shift before the crowd does? If you want more research-backed breakdowns on wealth, markets, and global shifts, make sure you subscribe to the channel.